markets and why it's actually flowing into cryptocurrencies, even though we've seen cryptocurrencies bounce back a little bit. Bitcoin's under 5,000, it's around 4,000 and a half, 4,500. So thought we'd just have a look at that. But before I start that, I've got some really good news. We've kicked off our Kickstarter campaign today, and it goes for 30 days before the end of Christmas. And basically it's a course, as I said, it's a course. Oh, sorry, I've got to say the disclaimer, I'm not a financial advisor. I don't know your risk profile, all that sort of thing. This is education only. Just talking about Kickstarter. I've got to learn how to link the this link here, how to put it in the video, and I'll work that out before I send this out. Our course is on Kickstarter now. It's about cryptocurrencies. It's a fairly in-depth course, 10 modules. Liz and myself, Liz is a rocket scientist, we put this course together. It's only €45 or approximately $50 US. It's going to be the best money you've ever spent, seriously. It's looking at cryptocurrency, blockchain, all sorts of things, the practicalities, how you set up, how do you set up trading, how you set up, going to the exchanges, how you sell and buy cryptocurrency, how you set up a portfolio, how you look at different, trading portfolios different to a structured crypto investment portfolio, that sort of thing. We'd really like your support because the funding for this is going to expand my business. I'd like to go into Europe next year and just make this business a better business. At the moment, as you know, I can't do videos very well, and video editing, I'm pretty hopeless with all the technical stuff, that's for sure. A bit probably a reflection of my generation, actually. But so this course is going to be really great. It'll have quizzes, it'll have questions and answers, it'll have great links. You'll be able to do little tests and things like that. But it'll, honestly, I'm not kidding, it'll be the best $50 that you've ever spent. It's not a lot of money, but I really appreciate the support. So Liz, as you know, did a lot of it in terms of the video editing because I'm hopeless. And she's had well over, it says 15 years on this slide, but she's had 30 years of, financial risk management systems and IT stuff, and really, she started as a scientist. So she's pretty much a rocket scientist, a rocket person, if you know what I mean, in terms of IT and everything else. Stuff that I don't have. Knows all about banking, knows a lot about cryptocurrency, knows about the risk, the profile, the integration, all sorts of things. Basically, all the big banks need her expertise because, they need someone like Liz to be able to integrate all the new systems and everything else and to monitor the risks and everything else. So Liz worked in 2008 when the financial markets were imploding, and boy, was she under the pump. So, and that's pretty much, what we could potentially look at now with what's happening in fiat markets as well, and I'll address that in a minute. And I'm not going to say my experience. You pretty much know my experience. It gets a bit boring after a while. So let's this is the module, and it's basically an overview, cryptocurrency and basics, practicalities of registering wallets, cold wallets, the terminology, all that sort of thing. The exchanges, which exchanges to stick with, which exchanges to avoid. What are the limitations in moving crypto or vice versa? The fundamentals of cryptocurrency and technicals. What are the fundamentals you should look at, particularly? Say emission, for example, is it fixed or is it not? Say, for example, Ethereum doesn't have a fixed emission, which means it can actually issue as much supply as it likes. Now, if you have a cryptocurrency that issues as much supply as it likes, how can you value it? It's impossible to value because you don't know what the supply is going to be. You see what I'm saying? Whereas, say, XRP, you can actually value XRP because it has a fixed supply. It's really important. There's so many different things in crypto market that people don't know. And I'm always learning myself. And I'm not saying that I'm a specialist or, by any means the imagination, but there isn't a day that doesn't go by that I don't learn something in terms of financial markets and particularly cryptocurrency markets, which I find the most interesting markets of all. I've worked in a lot of markets, but I find cryptocurrency absolutely fascinating, and I'm pretty much obsessed with it. Let me just have a glass of water. I'm yapping too much. I used to get told off in school for talking too much in the class. So when I was a kid, and I'm still like that, as an adult. But anyway, we look at obviously Bitcoin and, POW, and obviously XRP, which is consensus algorithm, and proof of stake, which is Ada's technology, and then we look at trading, how to set up trading, how to set up trading plans, technicals, all that sort of thing, trading journal, what are some of the you can buy things off the shelf for trading journals, how to structure a proper investment portfolio for cryptocurrency. Again, very different to a trading portfolio, a trading account. As I said to you before, excuse me, I only trade stuff I don't hold as an investment because it clouds my view. I mean, I love XRP so much, I'm not going to sell XRP ever. So if I was trading XRP, with the moves in the cryptocurrency market recently, I would have lost a lot of money because I find it really hard to sell XRP. You see what I'm saying? So my investment portfolio, I keep XRP in that, and it'll stay there for at least 2 to 5 years when XRP is at, $334, what I said, and more. But again, I can't trade XRP because it's my baby, and it's like me giving away my baby. So sorry, I've just woken up today, so I'm pretty tired, but I'm always tired. My middle name's Susie Tired Crew. Susie Crew, middle name Tired. Anyway, so there'll be a recap on this, but this course is awesome, guys. So really, really like your support because the funding, as I said, is going to make this business bigger and better, to basically, give clients better material. I can come up with the content, but the way I display the content's pretty crappy, as you all know. So, and also just, train people even better and better. And, we'd like to set up dealing rooms and all sorts of things. So I'm looking to expand in Poland because my business partner's Polish as well. And we just see there's a lot of opportunity there. Also with the Russian market, the cryptocurrency in Russia is actually, it's legislated, it's been regulated, and they accept it. So enough of that. Let's get into the video. What I want to talk about today is cryptocurrency markets. Yes, we've seen, Bitcoin get absolutely smashed. It's dropped below 5,000 level, 4,500. Some people are technically talking it even lower. And I mean, that's what happens. All people come out of the woodwork, oh, it's going to go lower, it's going to go lower. Why didn't they say that when it was at 20,000 US? Seriously. That's what happens all the time. You get that on the investment banking side as well for equities. It's like equities are up at 28,000 or 27,000. They all come out with bullish forecasts. And then the minute the thing starts moving down, they all come out with negative forecasts. It's just typical of what people do. But anyway, but I will say XRP, my baby, is holding up very, very well. And, even though there's a lot of weakness in fiat markets, which I'll tell you about, which is certainly flowing into the cryptocurrency markets, XRP is doing incredibly well, and it will be the #1 cryptocurrency out there in the world. People will know about XRP. It'll become a byword for cryptocurrency. It will take over Bitcoin. Again, Bitcoin is old technology. Okay, it's basically, from 2008, 2009. Sorry, my hair's annoying me today. It's old technology. It's, proof of work. It's slow. It's clunky. You're relying on 4 major Chinese miners to, put transactions through. There's a security risk in that, which Donald Trump doesn't like, the president of the US. Again, if the system gets queuing problems, the price of doing a transaction went up to, as we know, over $50 US. Now, the same with Ethereum. It's got the same problem. It uses the same miners. So does Bitcoin Cash. So do all the hard forks of Ethereum and Bitcoin. And that is a real problem, okay, because they're competing for miners. Also, you've got other cryptocurrencies out there like Neuromation that basically compete for mining power. Now, if that's the case, you're going to have a lot of competition for miners with their computer power, where they can, grunt and process their grunt, through their computer power, grunting away or whatever it is, to do other stuff for other people or other corporates or other clients. So the miners are going to be in big demand going forward, and you're going to have more problems with the transactional process of Bitcoin and Ethereum or any other hard fork or cryptocurrency that is reliant on the miners. Now, that's a fact. So XRP, as I said before, and I said it 2 years ago, and I got laughed at, but that's okay. People laugh at me all the time because I'm incredibly clumsy. XRP will be the #1 cryptocurrency. I don't have a doubt about that. It works. You never have any problem transferring anything. It happens fast. Anything else I've ever transferred, it just takes forever. You could have a sleep and get up 3 hours later and it still hasn't gone. You'd wait until the next day and it's still not there. Anyway, enough of me rattling on. Let's talk about the fiat markets. Now, we've seen this massive weakness in equity markets. And technically, for some time, I haven't liked the US equity market. It's gone up, 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 up on a low interest rate environment. Okay, interest rates from '08 were so low, the yield curve was inverse and it was negative. In other words, interest rates were negative. If you borrowed money from a bank, it didn't cost you any interest rate payments. The bank would give you money back. So let me say it again. If you borrowed money from a bank and you're a high net worth individual, the bank would give you interest back with a negative interest rate environment. Now, with that situation and that climate, what people did is they borrowed with a negative interest rate from a bank where the bank paid them interest, and they then invested in the equity market that was yielding, say, 4 or 5%. Now, if you're getting 1% from the bank and you're investing in the equity market at 4%, you're making 5% risk-free for nothing. You see what I mean? So in '08, in '07, the equity market got to 14,500, the Dow roughly, around 14,500 from memory. It then, in terms of the global financial crisis, it sold down, and this all started from the mortgage-backed securities and the bad lending to people, lending, to people that were on statutory income like pensions and weren't even working, and there were bogus, borrowers and this sort of thing. The whole thing collapsed, and it started through, the subprime market, which was bad lending to houses and mortgages and this sort of thing. Where borrowers didn't even have the income to pay back anything. But in your market, in the US market, if you can't pay things back, you just go to the bank and hand in the keys, and it's a no recourse loan. In other words, you can walk away. In our market, we can't do that in Australia. The bank will get us no matter what. They'll get us to the next generation. Basically, if we owe the bank money, no matter what happens, we have to continue to pay the bank back. Or otherwise, that's it. It's like taxes. They'll get you no matter what. So coming back to the Dow traded from, the 2008, 5,800, and it got up to about 28,000, and now we're seeing it at 25,000, right? Now, the US has just had all this seasonal, that they have their seasonal reporting happening and everything else. But if you look at the content of that reporting, you'll find that even though companies did well on their profit line, their revenue line is not increasing. Now, profit, as you know, is revenue less costs plus, the equity, So basically, if you're reducing your costs, but you're not increasing your revenue, your profit line goes up. So the growth in a lot of US companies is not happening. And we saw that with General Electric, which used to be an industry bellwether of how the overall global economy was going. Now, General Electric cut their dividend to 0. People used to invest in General Electric because it was giving you a dividend of 4%. So if you could borrow at negative, you can go into General Electric at 4% and basically, happy days, man. You're making more money for no risk at 5%, and the stock keeps going up, right? But General Electric just came out and said, sorry guys, and investors, we're not paying a dividend anymore of 4%. And people relied on that dividend to live, right? So again, they can't afford to pay a dividend because their income stream is not rising. It's not going up, their revenue stream. And that's the problem with the US equity market at the moment. Now, I think the US equity market can fall like a lot. Like, I'm not kidding. Not just from 25,000. I think it could fall to 10,000. I think it could go down 15,000 points. I know that's alarmist, but I think it's true. Not much has changed since the GFC. The thing that's changed is interest rates were negative, and now interest rates are starting to go up, and up they will go, and up they will go a lot. The Fed is raising rates, and they will continue to raise rates in the US. Everywhere else they're starting to raise rates, and that is not good for equities. Now, the reason it's not good for equities is because if you have a corporate, they will value a corporate with all its cash flows. You know, with the discounted cash flow model, they call it the net present value model. They'll value all those cash flows, which all go out to forward years, and they'll bring them all back to a discounted cash flow model over an interest rate. So I'll give you an example. Say the net cash flows of a company are plus 100. If an interest rate is 1%, they'll value 100 divided by 1%, 1 plus 1%, and that will come up with 100, right? The share price being 100. If suddenly an interest rate is 2%, so they'll go 100 divided by 2, suddenly a share price is 50. So rather than the share price valuation now being 100, it is $50. So here you are, you're sitting with a share, Morgan Stanley valued it at $100 and your share's at 80, and you think, okay, I'm going to hold on to this share. But then the next day they come out and they valued this thing at $50. What do you think the market's going to do? The market is going to sell that share. And equities, yes, they're valued on a lot of other things, but an interest rate metric is pretty important for those discounted cash flows. And interest rates, as I said, are going up and up and up. And this will overflow into every other market, including the cryptocurrency market. Because what happens is, when other markets start selling down, people have borrowed money generally to buy assets within those markets, the investment markets, whether it be equities, whether it be bonds, whether it be high yield bonds, whether it be corporates, high yielding corporates. As the markets go down, because the markets are going down and they've got margin lending or borrowing against their equity or their high yield bond position, they then get a margin call by the exchanges or by the lender, and they have to come up with cash, and they need to come up with cash fast. But because they all use the traditional crappy SWIFT settlement system, they may not be able to get cash into their margin lending portfolio, right, for a day or two. So they look around and they look at every other asset they've got and they go, oh my God, I've got to sell something where I can get cash fast. So they look at the crypto market. And so that's the only market where they can get cash fast. Sell their crypto and buy, get cash and put it into their margin lending account. You see what I'm saying? Now, I've done studies on this over time, and I know the crypto market's, only new, and it's a bit hard to get proper information, but it does show you when you get big sell-offs in traditional markets, the cryptocurrency market initially will come down, because people need cash, but then people realize, the investors and everyone else, that the crypto market generally should not be affected by the fiat markets because it's not related. The only reason why it's related is that people, the investors, need cash. So they look to sell every other asset to get that cash. You see what I'm saying? So generally, in times when markets keep going down, eventually people realize that the cryptocurrency asset class should not be positively correlated with the equity market. In other words, if there was a positive correlation, the equity market goes down by 1%, then the cryptocurrency market should go down by 1%. It should be negative. In other words, if the equity market goes down by 1%, the cryptocurrency market could go up by 3%, which is a negative correlation. And that's what it should be. We're probably not going to see that, though, until the market gets more mature, okay? Because at the moment, we don't have enough professionals in the cryptocurrency market. So we look at every other stock market in the world, and all the other stock markets got hit very hard. Another one to keep an eye on is China. because the China is in all sorts of problems at the moment. China's growth is down 6.5% global. Their growth of their gross domestic product, their growth, because of all the tariffs that President Trump is putting on Chinese exports, they're not getting the export income they used to. So their growth is down from 8.5% to 6.5%, which means they don't make the revenue. They can't, obviously buy US treasuries like they used to. They can't pull out of their population. They've got a population of 800 million people that live in poverty. Now, China have done forecasts that they need to have 8.5% growth to pull people out of poverty into middle class. And if they don't do that, they're not generating enough jobs to do that. You see what I'm saying? If they can't export to the US because of tariffs, then they can't employ as many people in their business in China to make the goods to export. So if people in China can't get jobs, they don't get income and they can't pull themselves out of poverty. And that's a big problem. And that will affect global growth as well, which again will affect equity markets and other fiat markets, as well as initially crypto markets, because people need cash. Okay, I'll try and make this a bit quicker because all of a sudden it's 22 minutes. So what you also have is another effect in the foreign currency market. When they sell US dollar equities, and I'll emphasize that again, it's in US dollars. So I'm an Australian investor and I hold US dollar equities. And I believe the US equity market is going to go down. So what I do is I sell my US dollar equities and I buy back into Australian dollars. Okay, I have just done a foreign exchange trade. I've sold US and I bought Aussie. You see what I mean? So in other words, I bought Aussie and I've sold US dollars. And so if I'm selling US dollars, I'm getting this effect. The US is coming down and Aussie's going up. I'm selling US dollars and US dollar is going down. So generally when the US dollar equity market goes down, the US currency will go down. And generally when there's times of volatility, foreign exchange traders and investors will look for safe haven in government bonds, Australian government bonds, or US dollar government bonds, or Japanese yen government bonds. In terms of foreign currency, people tend to buy safe haven currency when all the other markets, like the equity market, are imploding. They'll buy yen, they'll buy Scandinavian currency, and they will generally buy the Swiss franc. But they will not buy the US or exotic currencies or emerging market currencies, debt currencies as well. Also, what we're finding is emerging market debt spreads are falling. The price is falling, but the interest rate is rising. Okay, if we look at the US yields, I've got to hurry this up because it's getting longer and longer. US yields over a year have gone up 111 basis points or more in the short end because they're raising rates, the Fed. And when they raise rates, the short end is closer, the 3-month and the 6-month is closer to the federal funds rate. Okay, it's closer, right? It's tagged closer to that. So you're going to get more effect on your shorter dated securities, right? Your longer dated securities, because they're further away, aren't going to be as affected from a rate hike, but they are affected still because they're up 53 basis points. Now, in fixed interest rate land, 111 points up, or 1.11% is a big rise in interest rates. Generally in fixed interest markets, to give you an idea, markets generally don't move a lot. They might move 2 or 3 pips a day, right? But to have a move this big in a year is substantial. and that will reflect in every asset class's valuation because interest rates are rising, thus bringing the price down of the asset because of the net discounted cash flow model, the net present value model. Okay? Interest rates in the US are going higher, and they're going higher everywhere else. All right? They're going from negative, which they used to be in Germany and everywhere else, to positive yield curve. The yield curve has to get back to normal because in 08, 09, 2010, whatever, the yield curve was abnormal. We had negative rates and we've never seen it before. And that's why assets everywhere went through the roof. Australia property went through the roof. You know, the emerging, you know, all the high yields have gone higher and higher in price. And that's why we've seen the run on the chase for yield, okay? In every other market, a premium over a negative interest rate. Now, we've got also the Italian bond yields are going higher and higher. And that's a worry, and I'll tell you why. Because Italy, as you know, is in the euro. They're in the European Union. And to be in the euro, they're regulated by the European Central Bank. The European Central Bank sets down regulations that if you want to be in the euro, you have to run the balance sheet of the country according to the rules that the European Central Bank lays down. And if you don't, then we could kick you out of the euro and you won't get funding from us. And the biggest funder in terms of the European Central Bank is Germany, right? So Italy, and I'm half Italian myself, doesn't want to be told what to do by the European Central Bank, which the biggest voter on that committee is Germany. I mean, I'm not surprised. Probably goes back to the war. The Greeks are the same. Because Germany is saying, and the European Central Bank is saying, Italy, you've done a crap job on your balance sheet for the country. You are spending way too much money. You have way too much debt. And we're concerned you're not going to be able to pay back that debt. Okay? So they want to put on austerity measures on the Italian economy and tell the Italians that they need fiscal restraint. Now, what fiscal restraint means is fiscal policy, which means tax policy. You know, tax your citizens more, stop spending, you know, stop spending beyond your means, stop spending your credit card, and take some fiscal responsibility for what you're spending in the country. Stop spending on roads, stop spending on infrastructure, stop spending on public, what is it, public works, reduce your, your government officials, whatever. But we need you, the European Central Bank says, to reduce your spending. Otherwise, we're going to impose things on you ourselves. Now, Italy, as I've said before, has the third largest bond market in the world. The US has the first, the Japanese has the second, and the Italians have the third. Now, that means the Italians have borrowed money from the whole world through the capital markets, issuing their own bonds, okay, which get rated by Standard & Poor's and Moody's. If their rating goes below BBB plus or BBB minus, which is the lowest of investment grade, fund managers will sell those bonds like you've got no idea. In other words, the price goes down, the yield goes up, because they will not be investment grade, and fund managers are not allowed to hold in bonds that are not investment grade. So yields, of course, are going up because people see a risk that the Italians will not pay back their bonds that they've borrowed the money from, borrowed from people, I should say, the investors. And subsequently, the investors are asking for a higher premium. Now, the Italians have said to the European Central Bank, we're Italian. We don't want to take any notice of you. We believe we don't need it, so go away. They've delivered their budget 3 times, the same budget. It's typical of the Italians, I swear to God. It's typical. They just want to have a good time, and I understand that because I do as well. They just want to drink coffee and smoke and eat sweet cakes, and that's me as well. They just want to have a good time, and they don't think they need, a fiscal restraints, and they don't want to burden their people anymore because they've seen what's happened in Greece. Greece has had tough austerity where the pensions have been cut to a third. People are living in poverty. The whole country is depressed. Greeks are depressed. The suicide rate's up. It's terrible. I've been there. It's shocking. I speak a little bit of Greek as well. So the Italians don't want to do it. And so this is what will happen. Rates will continue to rise. And the thing is, the risk is if the Italians default on their debt, which means they can't pay back their debt, just like if you borrow money for a house and you can't pay it back, all hell is going to break loose. The markets, the fiat markets are going to be down again even more. The equity market, particularly the Italian equity market, will be down, down, down. And, this will just go on and the fiat markets will look even worse than what we're seeing at the moment. Quickly going through these slides because all of a sudden it's 30 minutes, sorry. So we've seen all rates everywhere, even Japan going up, and even Japan for 6 basis points, and the Japanese rate's 0.10. 6 basis points is a lot. German rates have been going up. UK rates have been going up. Excuse me. Corporate yields, corporate bond yields are going up higher. Corporates borrow from the corporate bond market like they borrow money from the equity market. When they have an equity issue, they borrow money from the investor. You buy their shares, you're giving them money. In the corporate bond market, they can fund through the corporate bond market, okay? And the investor will give them money and they'll get their bonds at a certain yield. Now, when their company gets worse or there's fraud or they're not making as much money, the yields on their bonds will rise because the investor wants a higher premium for the risk that they're taking on. And that's understandable. So we've seen Renault, Nissan, for example, some big fraud, and Mitsubishi, and their bonds have blown out to 150 basis points wider. Now, as I said, in the fixed interest market, that is a lot. 1.5% is massive, okay? So again, corporate bond yields are blowing up. Paul Tudor Jones, who's a really well-known fund manager, hedge fund manager from the 80s, and still is doing very well and made a lot of money, basically said he's very scared at the moment. He's seeing very scary moments in the corporate debt market, and rates are going to continue to rise. And we're seeing that in high yield names too. So there is a lot going on. In terms of my Baby XRP, obviously the more going on in the fiat markets is going to affect the cryptocurrency markets. But I believe going forward, as the cryptocurrency market matures, people will start to realize that there should not be a positive correlation between, say, for example, the equity market and the cryptocurrency market. And the cryptocurrency market, in my mind, is such an opportunity. Anyway, that's all I want to say, guys. It's a long video and I'm very sorry for that. But please do, buy our cryptocurrency Kickstarter campaign program. We've got great videos. Let's put them together. It's not on my crappy videos. It's only, I know $50 can be a lot to people. I understand that because, there's a lot of poverty out there. But I do believe it's the best $50 you'll ever spend. It's roughly 50 US. They wanted us to do it in euro. I don't know why. But what I'll try and do is put a link on this video. I have to work out how to do it so that you can just press on that link. Anyway, guys, thank you for listening to me. I hope I didn't rattle on too much. I need a cup of coffee. Please be kind to yourself. Life is very short. People die of cancer every second of the day. And look after yourselves and yourself personally, your family, your parents. You're lucky to still have them around. I don't have mine around. Your family, friends, everyone around you, because life is really short and we need to be kinder. Because honestly, this world, I don't like the way it's going, and I'm very old school, and I think people were kinder in the older days, but maybe they weren't. I don't know. I'm rattling on. I'm tired, but thank you anyway for listening. See you guys, and I'll talk to you soon.